Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down a wild day in the markets. We've got a ton to cover, from cooler than expected inflation data sparking some optimism to AI disruption fears shaking up tech and beyond. So let's dive right into the action and see what's driving Wall Street today, always keeping our long-term investment lens in focus. First up, let's talk about the major indexes and how they performed today. It was a mixed bag out there. The Dow Jones managed to edge up slightly by 0.1%, holding above that psychological 49,500 mark after briefly slipping below 50,000 earlier this week. Meanwhile, the Nasdaq took a bit of a hit, down about 0.25%, as tech stocks felt the heat from AI-related concerns. The S&P 500 stayed nearly flat, just a hair above break-even, while the Russell 2000 outperformed with a solid 1.2% gain, showing some strength in small caps. Volatility, as measured by the VIX, eased a bit, suggesting a touch less fear in the market despite the choppiness. Now, zooming out to the broader economic picture, the big story today is the January inflation data. The Consumer Price Index came in cooler than expected at a 2.4% year-over-year rise, down from December's pace and below what analysts had forecasted. This has fueled some excitement about the Federal Reserve potentially cutting rates sooner rather than later in 2026. But hold your horses. Core inflation, which strips out volatile food and energy, held steady, and some experts are cautioning that one data point doesn't make a trend. Still, for us long-term investors, this could signal a more accommodative environment down the road, which often supports equity growth over time. On the flip side, there are lingering concerns like high utility bills for many Americans and political noise around tariffs and a potential government shutdown, which could add short-term uncertainty to the mix. Let's shift gears to the day's big winners among large-cap stocks. Applied Materials led the charge with a stellar 8% gain, riding the wave of tech optimism in certain pockets of the market. Arista Networks also impressed, up nearly 5%, while Newmont Corporation surged 6.5%, likely benefiting from a bounce in precious metals. AppLovin wasn't far behind with a 6.4% jump, and Vertex Pharmaceuticals climbed almost 6%, showing strength in healthcare. For long-term investors, these moves highlight opportunities in sectors like tech and materials, especially when broader market fears create buying windows. Even in the short term, these names are showing momentum that could carry forward if macro conditions align. On the flip side, we've got some notable decliners to watch. Constellation Brands took the hardest hit, dropping over 8%, a sharp reminder of how consumer discretionary can face sudden pressure. Royal Caribbean Cruises slid nearly 4%, alongside Air Products and Chemicals, also down about 4%. Visa and Ferrari each shed around 3%, reflecting broader concerns in financials and luxury goods. These short-term dips might spook some, but for us long-term players, they could be chances to scoop up quality names at a discount if the fundamentals hold up. Keep an eye on whether these are sector-specific issues or broader market sentiment dragging them down. Turning to the market movers, the heavy hitters that drive so much of the action, we saw mixed results. NVIDIA, despite being one of the most active stocks by volume, slipped over 2%, caught in the tech sell-off tied to AI fears. Apple also dipped by a similar margin, while Amazon and Alphabet each saw smaller declines. Tesla, however, bucked the trend with a slight uptick, showing some resilience. These names are critical for us long-term investors, as they often set the tone for market direction. Short-term volatility here, especially in tech, could be a signal to reassess allocations, but their innovation and scale keep them core holdings for many wealth-building strategies. Speaking of volume, let's check out the most actively traded stocks today. Rivian stole the spotlight with a massive 26.6% surge on an upbeat delivery forecast, driving huge trading activity. NVIDIA, as mentioned, was also heavily traded despite the dip, alongside Intel and Ford, both showing decent activity with modest gains. Pinterest, on the other hand, saw heavy selling pressure, down nearly 17% after disappointing earnings. High volume often signals strong investor interest, and for us long-term folks, it's a reminder to dig into the why behind these moves, whether it's a fundamental shift or just market noise. Now, Let's pivot to earnings, as it's a busy week with plenty of big names reporting. Companies like McDonald's, Gilead Sciences, Marriott, and Applied Materials have already dropped their numbers, with mixed reactions. Applied Materials, as we noted, got a nice bump post-earnings, while others like Airbnb saw gains despite missing some estimates, thanks to strong bookings. Looking ahead, we've got heavyweights like Deere & Company and Palo Alto Networks coming up, which could sway sentiment in industrials and tech. For long-term investors, earnings season is less about the daily pops and drops and more about gauging a company's health and growth trajectory. Are they investing in the future? Are margins holding up? That's the lens we use. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and make informed decisions for your portfolio. Before we wrap up, let's take a quick look at some standout performers over the past week. Vertiv Holdings skyrocketed over 30%, fueled by AI infrastructure demand and a massive backlog. CoreWeave also jumped nearly 23%, another AI play gaining traction. Ferrari raced ahead with an 18% gain, showing luxury demand remains robust. These weekly movers can offer clues for long-term trends, especially in hot sectors like AI and high-end consumer goods. Even if you're not chasing short-term gains, these surges might point to durable growth stories worth researching. On the other end, Reddit took a brutal 19% hit over the week, reflecting concerns over growth sustainability. CBRE Group dropped nearly as much, impacted by real estate sector jitters. Astera Labs fell 17% post-earnings on margin worries, despite AI tailwinds. These weekly losers remind us that even in a bull market, selective pressure can create opportunities for patient investors. A long-term view helps us see past temporary setbacks to the bigger picture. Lastly, a quick peek at sector performance over the past week. Basic materials led the pack with a 2.4% gain, likely tied to commodity strength. Energy also showed resilience, up nearly 2%, despite daily volatility. Utilities and consumer defensive sectors posted smaller gains, offering some stability. For long-term portfolios, these sector moves can guide diversification. Materials and energy might offer growth if global demand holds, while defensive plays remain a safe harbor. On the downside, energy also appears among the worst performers when looking at daily shifts, down nearly 3%, showing its volatile nature. Technology lagged with a 2.4% weekly drop, hammered by AI disruption fears. Healthcare and consumer cyclical also slipped, each down over 1.5%. These short-term sector declines don't necessarily derail a long-term strategy, but highlight areas to watch for potential value or risk. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the ups and downs of the market with a clear, long-term perspective. Be sure to stay engaged with MarketSnap for more daily summaries and in-depth SWOT analyses to build your wealth strategically. See you tomorrow for the next update.